Welcome to Markets Now. I'm Michelle Rook with Brian Splitt with agmarket.net, and we're seeing quite a bit of green on the board after the big reports here from USDA, both prospective plantings as well as quarterly stocks. And Brian, the big wow number here, obviously that 90 million acre corn number.
It is, that number, and you could still put a trend line yield on it, and if you grow that, it's still long-term bearish. But it does change the narrative here in the short term. That number also combined with the stocks number, which was lighter than expected by about 80 million bushels from the trade estimate. So you had both working positive for corn today. And if you just go back and look at the history of this report, whether the report is bullish or bearish, generally that direction will hold true for the next several weeks. So we do have a reversal higher in corn today. We traded below yesterday's lows. We took out yesterday's highs. We'll see if we can close above the 50-day moving average. That would be a very strong technical achievement that would bring in additional short covering from the funds. So today's close is very important. But both the acreage and the stocks number for corn were friendly. And that may just be enough for the funds to want to continue to reduce their short position as we go into the planting season.
Yeah, this really feels like some major action here today. As far as the state-by-state breakouts, Brian, when we look at that, 4.61 million acres total decreased from last year across corn country, but it was everywhere. It was I-states, it was Dakotas, and some pretty big decreases in corn.
Yeah, so the state-by-state numbers, a lot of the decreases were in some of the major production areas, and so not every acre is equal. And so what we have lost year over year is a lot of our higher producing ground. And so also for the acres, and this is true for both corn and soybeans, both numbers were about 1 million acres less than what the February Outlook Forum showed. So they used 87.5 on soybeans. It came in at 86.5. And they used 91 on corn, and it came in just a hair above 90. So total between the two, our corn and soybean acres dropped by 2 million from the February Outlook Forum numbers.
Yeah, and when you look historically, Brian, and you have a positive report, especially compared to expectations in corn, how much upside do you have from there going forward?
So generally with this report, it's not going to be a one-day event. We're likely to, if we have a strong close today, and the narrative is that this was a bullish report, we will continue to see the market go higher, at least for a few weeks. So this may put us into a time frame where the market rallies going into planting to get extra acres planted. And I would venture to say that history would suggest that when we get to the June report planted acreage number for corn will be higher than today's number.
Gotcha. 86.5 million acres of soybeans, so up about 3 million acres from last year. And really, that came in all of the major production areas as well, didn't it?
Yeah, and so up from last year, down from Outlook Forum, and spot on with what the average trade estimate was. So hard to get too worked up either way on the soybean acreage number. Maybe the important thing for beans is that our stocks were a little bit bigger than expected by nearly 20 million bushels. So nothing extremely material, but maybe that just speaks to the lack of export demand that we've had. We would expect the crush demand to continue to be strong, especially as additional processing facilities come online here. With our initiatives for renewable diesel. But as far as today and the report, acres were neutral and stocks a little bit on the bearish side.
Yeah. And the overall wheat acreage came in a little bit higher than expected, right?
Yeah. So winter wheat acres, part of that January report is the winter wheat seedings. And so winter wheat came in about 300,000 acres less than that January number. And that was a kind of a gospel number until it was revised today. So winter down, but all wheat came in a little bit more than what trade was looking for. And also the all wheat number was about 500,000 acres more than the February Outlook Forum. So again, corn and bean acres, 1 million less than the February Outlook Forum each. and all wheat acres 500,000 higher than the February outlook for them.
Yeah, and quarterly stocks actually on wheat came in a little bit bigger than expected too.
Yeah, about 40 million bushels bigger than expected. So I think the initial rally that we had in wheat was led by the SRW and the HRW. We had a quick pop because that winter wheat acreage number came in below expectations, but very quickly pulled off of those highs because of the all wheat number.
Gotcha. So we talked about price action in corn from here and technically what we're seeing. Soybeans and wheat, what do you see for price action going forward, trying to put these numbers or digest these numbers?
Well, right now, I would say on the soybeans, as long as we're holding the 1180 area on the May contract, the front month, we're holding kind of this uptrend that we built. Today's close will be very important. I'm blind right now. I have no idea where the futures are trading, but I could tell you that if we could get back over the 1210 level on May, then that should lead us to some new highs. There are still technical objectives above the market that if this trade did want to go higher for the next several weeks, we have plenty of upside if the funds want to continue to cover shorts. We saw just in 1 week of short covering, the soybean market advanced materially. So then we had where the funds basically took a week off. If they come in here and next week, as we come out of the long 3-day weekend, and we're in a new month, if they come in and start covering additional shorts, there's a gap in November beans at 1244.5. Your 200-day moving average is about 42.5. You've got your August low was 1233.5. Your October low is 1235. You've got a 62% retracement of the July high last year to the February low that we just made. Comes in at the, 1245, 47 area, somewhere in that zone. So there's like 5 different technical objectives to go up to that 1240 to 1245 area on November beans. And again, if we could get through 1216 on November beans, that would be a breakout through last week's highs. Beans have actually been trading technically better recently than corn.
True.
Corn has not been able to get through the 50-day moving average. Hopefully we do today. Beans already got through them. They've been using the 50-day moving average as support. So a decent close today is just another close over the 50-day there. And then we're going to start shooting for the next major moving average, which is going to be your 100-day, which is a decent move higher from here. As far as wheat goes, a move, we've traded through some short-term resistance. We came down and interacted with the uptrend on the wheat chart for the new crop Chicago wheat, the SRW. We need to get through some of these higher weekly points that we've had over the last few weeks. And if we can, then the wheat will also be the benefiter of some short covering. So new crop Chicago wheat above the 580 area would likely do that. We got up to, I think, about 577 on the highs so far today. I'll also actually backtrack to soy and look at meal for a second. May meal was right at its uptrend right before the report numbers were released. So if you just take a step back and look at the meal chart, it'll say, oh, we just went and hit support and bounced off of it. So hopefully we could see meal advance to the upper end of that channel, which would mean new highs for the move as well.
Yeah. And Brian, obviously we're the last day of the month, so these monthly closes are going to be important here today for sure. Weather's going to be the next focal point though, right?
It is, so we're still going to be looking at domestic weather for our planting conditions, and we're still going to be looking at South American weather and mainly for 2 different thought processes. One is the thought process of harvest in Argentina. They have been wet recently. We're getting a little reprieve from that, but there was some conversations of and remnants of 2016 when they had a great bean crop in the field, and then it started raining during harvest, and then it kept raining, and then it started flooding in the fields, and then they priced in 8 to 9 million tons of lost production. It only ended up being half that, but it was a very sizable move. So that rally had bottomed right at the beginning of March in that year, but it didn't really get into full swing until early April, which was when it was still wet in that bulk of harvest. So we'll be watching Argentina. If we start turning wet again in April, that could be a catalyst. That is a big meal exporting country, so that would be very supportive to meal. And then, of course, we're looking at Brazil for the safrinha corn crop. And so, you backtrack months ago back to fall, and it was Mato Grosso dry, and the rest of the area was wet and having adequate moisture. that seemed to be the theme coming back into the safrinha crop, although we did get some rain here recently, but there's still some time before pollination. So I personally feel like we could have some kind of a high where maybe we get a little concern about getting our domestic acres planted, and we get a little bit of a concern about the safrinha corn crop happening simultaneously, and end up making highs for corn for the marketing year here in the April-May timeframe. And then I fully expect acres in June for corn are going to be higher, and that we're going to be on a downward trajectory into fall. And I think the downside price action is going to be substantial on both corn and soybeans between now and 6 months from now. So I think short-term friendly, long-term bearish would be my synopsis.
Gotcha. Thanks for your analysis as always. Brian Splitt with agmarket.net. That is Markets Now.